Hello there, welcome to myfinanceteacher.org. By popular support, today we're going to have a look at energy, including crude oil, natural gas, and uranium. Starting with crude oil, over the last couple of weeks, relatively good news with crude oil was that it's finally broken out of this long-term downtrend that has been respected all the way since the beginning of 2022. Since then, crude oil has retested the breakout, but I don't think that over here on the 22nd of April we have seen the end of this ongoing crude oil cycle, as the correction down in the first half of April was relatively mild, and that would give us a cycle lasting for 131 days, which is pretty close to an average duration, although the average duration is in fact over 5 months. Plus, if you zoom out a little, you see that historically, although not every time, but most of the time, cycle lows on crude oil do break below the 50-day moving average and stay below that 50 DMA for at least a few days. So over the next perhaps a couple of weeks, what I would expect is crude oil to break below this 50-day moving average, give us a couple of pokes below the widening Bollinger Bands, perhaps even break below the 200-day moving average, creating a cycle low a bit closer to the average duration of the cycle, perhaps somewhere into the second half of May. That would give us a cycle lasting for 150 to 160 days. Next, let's have a look at the optics, the optimism index on crude oil showing the market sentiment. We see that market is still pretty excited, pretty elated about crude oil. The market sentiment is at 54. Historically, as you see, the cycle lows on crude oil come with this optimism index at least somewhere around the level of 40, sometimes even as low as 30, or even below that at significant lows as in, say, March 2020. And even in through the middle of 2021 over here, when the cycle lows were accompanied by relatively high lows on optimism, even back then the optimism index did drop below 50 to accompany those cycle lows. So over the next couple of weeks, I still do expect some softness in crude oil to bring this market sentiment index at least below 50, perhaps even a bit closer to 40. In the longer term though, I do expect crude oil to be relatively strong. Although there is no particular long-term shortage of crude oil at the moment, still some continued tensions in the Middle East might again continue to put upward pressure on crude oil prices. In the, again, very long term, we might see something like a long-term cup and handle formation, perhaps even bringing crude oil closer to, again, that 120 level sometime next year. Next, let's have a look at natural gas. Through the middle of last year, we've seen an exceptionally long cycle in natural gas. Those are usually followed by relatively short cycles. That's been the case all through the beginning of this year, 2024. The current cycle has been going on for 70 days. The average duration of these cycles, going all the way back to 2017, the beginning or nearly the beginning of that bull market in commodities, the average cycle has been 119 days, so that's nearly 4 months long. So while this cycle still has time to perhaps reach its peak, I don't think a peak is going to be significantly higher than current prices. What I would expect for natural gas is perhaps a bit of a fake out, a fake breakout above the 50-day moving average, perhaps a retest of this previous high somewhere around $2.7 before a decline down into the cycle low. That's in fact often how markets work. A break above this 200-day moving average would entice a lot of the less experienced traders, which eventually might be left holding the bag. After all, looking at the natural gas storage, the blue line here is current levels in the storage back in the US, and we see that the storage is well above the average. It's even significantly above the maximum level of storage over the last 5 years. Hence, as there is no shortage in natural gas, I don't really expect natural gas prices to explode anywhere higher. Although, again, as I mentioned, in a very short term, to move towards the top of this ongoing cycle, perhaps over the next couple of weeks, natural gas prices might creep up higher towards that $2.7. Looking at this market sentiment, we see that the optics is still at 36. Usually we would expect the cycle tops to come with the optics at least above 40, very often closer to 50 or perhaps higher than that. So again, as I mentioned, in the short term, perhaps a temporary move higher in natural gas before the cycle tops in another 2 or 3 weeks. then a continuation down as there's no shortage of natural gas. But again, in the very long term into 2025, I do expect natural gas to perform well as the US is expected to finally start exporting liquefied natural gas with those liquefaction facilities, perhaps finally getting ready sometime next year. And lastly, perhaps most excitingly, I do like uranium. Let's have a look at uranium. The previous cycle on uranium was extremely long and very, very productive, pushing the price all the way from around $55 to above $105. We've seen some consolidation since then, of course. And again, usually longer cycles are followed by one or two shorter cycles to average out the duration back towards that typical duration, which for uranium is again about 150 days on average, all the way since middle 2019. But of course, the actual duration might be as short as 91 days, that's been the shortest so far, all the way up to 249 days, the longest. That was the previous cycle over here. The ongoing cycle is only 46 days long, so I think there is quite a lot of time for the cycle to continue pushing higher, break above the 50-day moving average, give us a couple of pokes above widening Bollinger Bands into the cycle top before it'd be advised to get starting cautious a little bit. So again, perhaps a few weeks higher, a month or so higher. I don't expect significantly new highs. After all, from 55 to 105, that's a significant move. We perhaps will have to stay within this consolidation box for one more cycle. But again, in the shorter term, over the next several weeks, perhaps a month or two, uranium is quite attractive over here. Plus, looking at the uranium producers, we see that over the last couple of days, they start picking up the pace a little bit, perhaps expecting uranium prices to continue pushing higher. As the uranium spot price isn't liquid at all, often smarter investors might be drawn to the producers, which again might indicate perhaps an impending continuation higher in uranium prices. After all, this ratio of uranium producers to uranium price itself has been declining all through the last couple of years or so. Hence, uranium producers are relatively cheap versus uranium price itself, and over the next 1 or 2 years they are likely to catch up. In fact, perhaps in the very short term we might maybe see a bit of an inverse head and shoulders, which is usually a bullish sign, and hopefully in this or within the next cycle we might see this ratio test this level over here, respected all through the second half of 2022. That's somewhere around 0.46. So to sum up the video in one sentence, I'm still waiting for a cycle low in crude oil. We'll likely see temporary strength in natural gas, and I really do like uranium both in the short term and in the long term. And that's all for energy. For much more details on precious metals as well as a lot of other assets, make sure to join us at myfinanceteacher.org. For example, a couple of days ago, I shared crucial details on a very intriguing silver gold explorer that is supported by such giants as Hecla and Sprott. These are the sort of interesting developers and explorers that I do discuss in this category, juniors in metals, that will likely provide that additional torque to your precious metals portfolio once gold has sustainably made a base above 2400. That's all for now. Have a terrific Tuesday. Bye bye.